Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look here on the gold market. So yesterday we have mentioned one special trick that we have on the gold market, just because the difference between the retail broker chart and a COMEX chart. So yesterday was a holiday in the United States, hence we have on a retail broker chart one additional candle right there. And that's why the picture stands very different compared to reality, what's really is going on in the gold market. Now if you take a look at the COMEX chart, let's take a look that market just started flirting with the MACD, and with minor close below this area we still could get the grubber that we have discussed. So the bearish context still could be formed. Until the end of the week we do not have a lot of statistics, so we will get initial claims, some other data tomorrow as well, but this is not the primary importance. The data not of the primary importance. So that's why in the gold market it could have limited impact, or maybe data will be supportive for the gold. For the bearish pattern here, for example. For instance, if we'll get drop in initial claims, suggesting that the employment market some additional signs of the strength, let's call it in this way. So anyway, this is definitely the pattern that we intend to keep an eye on for today. Let's just start forming, not as it looks like on a retail broker chart. On the lower time frames, everything mostly stands the same as we already discussed. So the points that we have specified has worked nice. Market mostly has completed this ABCD pattern around the confluence. So we could say that probably market stands somewhere around where we initially planned to take the short position. Downside action is starting. So additionally, for bearish context, what we could say that let's take a look that the upward direction of the CD leg has taken almost 2 times more than initial AB swing, which is also potentially bearish, and it suggested that the deeper action could start. In general, we have, as we already said, garter steeple to sell pattern. So the first stage of our plan is completed. Now we just need to sit in the hands and wait what will happen. So either, of course, after the taking the short position, if you are interested with the setup. So that it's completion of the first stage. It assumes that we're at the point where we should make the decision on taking the short position. If everything goes really well with the pattern that we have in place on the weekly chart, and if we still will get the retracement that we're suggesting back down to this area, everything should be okay. So market just should keep moving to the downside. If somehow after minor reaction, which is suggested by garter steeple to sell, it's usually 30% pullback, so somewhere to the 23.10, 23 area maybe, it's minor retracement, market turns up and breaking confidence in opposite direction. That will be the direct hazard for weekly double repo sell pattern. This will be not really good sign for the weekly pattern. And because, as you know, the 24 is a vital area, so if market will jump above the C point, this will be erasing failure of the double repo pattern on the weekly chart, and correspondingly the context will turn into bullish, and this action might become the continuation of the major bullish tendency that we have on the monthly chart. So that's why how important why it's important what will happen around this area right now. On the hourly chart, I do not see something really special. The upward direction that we have suggested mostly has happened. Well, I don't know, maybe on the volatility on the data reels or something, market still could try to hit these targets. But if you have taken the position, you better to place stop above this area, above the OP and above 1% extension of the butterfly, because downside action started, but since nominally these levels are not being completed, than just few cents. So chances exist that market could still show the upward action and complete them. I'm not sure that's definitely will happen, but this is the risk that we have to foresee. This is obvious situation, and we have to take measures to not be just washed out from the market if this will happen. That's why if you plan to take the short position, it would be better to, or you already have the short position, would be better to place stops above this area. Also, the scenario exists when you just could sit on the hands and wait when the market will complete these targets first. This is also possible. Maybe some particular pattern will be formed here additionally. This is big patterns, but here minor head and shoulders might be formed, for example, or something. This is also the way how you could act as more conservative, but more reliable and safer. That's actually all that I could say currently on the gold. Let's keep watching. So now everything depends on the market performance and whether it will continue downside action or not.